Hey everybody, Abdullah Shamari here. Today we're going to be talking about Tencent Entertainment Group, or TME. Let's do it. Make sure to subscribe to my page, crush the like button for the YouTube algorithm, and check out my Patreon link below. You'll get insights into my watch list, my portfolio, my daily readings, as well as instant posts on my buys and sells as they're happening each and every day. Tencent Music Entertainment Group, or ticker symbol TME, is a multi-conglomerate company based out of China. They own multiple assets in various different industries, including communications, music, entertainment, cloud storage, etc. Popular assets that they own include Epic Games, which has produced Fortnite, as well as WeChat, which is considered the WhatsApp in China. All of these subsidiaries have done really well for the company, and overall the company has done very well. We can see the current market cap for the company is 33 billion, with them having a market cap 1/3 higher than that in the past, rising up to potentially 50 billion in the past based off its share price. We can see it recently had a sell-off. It went from $30 a share to now trading about $20 a share. We can see the target price for the company is at around $30 a share, and then we'll be going on through some of the financials of the company. I believe this company has some value and that we can definitely potentially make some gains through this company and investing in this company long term. We'll take a look at the financials now. Looking at the financials, the company's revenues have grown year over year. We can see from 18.9 billion to 25.4 billion to 29.1 billion, and all of these are in Chinese currency and not dollars. However, we can still see a significant increase in their revenue. We can also see that along with the revenue, their gross profits are increasing, so they're not sacrificing profitability in order to increase their revenues. And then finally, we can see that they're generating a profit. Net income of 1.8 increased to 3.9, increased to 4.1 year over year. They're increasing their profit as well as they're scaling their business, buying additional companies, getting into new industries or new areas. The company overall as a conglomerate is doing very well, including all of its subsidiaries and its assets. Next, if we go to their balance sheet, again, we see their assets healthy increase year over year from 30 billion to 44 billion to 52 billion. Their liabilities have also increased, but a much smaller scale. Their liabilities are only a total of 9 billion. And if we look at 2020, their liabilities increased to 15 billion, whereas their assets are at 69 billion. So they have multiples worth of assets in order to cover any liabilities that the company has. So they're in great position from a balance sheet perspective in order to meet any obligations that they have. One thing we do want to look at is what composes their assets, and we can see they have a significant amount of cash, and then the rest is investments, which is additional cash potentially that they have, as well as 20 billion in goodwill, which are intangible assets. And intangible assets are purchases that the company made, whether acquisitions or companies that they bought, and they had paid over the price that the company is worth from their tangible assets, which includes like fixed assets, cash, accounts receivable, etc. They bought those companies at a premium, so the premium usually goes to goodwill due to accounting standards and practices. Finally, we'll go over the cash flow. As we all know, cash is king, and how much cash the company generates is very important to be able to determine the scalability of the conglomerate as well as all of its various subsidiaries. So we can see here that each of the last 3 years, they have generated positive cash flow from operations. 5.6 billion, 6.2 billion, and 4.8 billion. Although the cash generated from operations has increased and then decreased, this can happen due to various forms and various reasons. However, the positive thing is that in each and every year, they've generated positive cash flow from operations and continue to do so. And in the current year, again, they're expected to do so as well. If we go to their quarterly financials, we can see here that each of the quarters they had positive cash cash flow from operations again. So we're expecting in the year ended in 2020 that they do the same thing, that they generate positive cash flow. As a result, the company is able to scale. They'll be able to take those positive cash flows and invest in additional acquisitions, or they're able to innovate and go into new industries that they hadn't been involved in prior year. Finally, my overall assessment is that this conglomerate has potential, especially with the price decrease that happened recently, and it was due to large shareholders trying to trade shares of the company. It happened to Baidu as well as Tencent, two Chinese-based companies, where potentially a big investor didn't want to invest in the company anymore. They wanted to take their profits, or they wanted it to hold more cash due to the uncertainty in the stock market. As a result, I think there's potential gains to be had with this company. Generally, I don't invest in Chinese-based companies due to lower accounting standards there. However, in bigger conglomerates such as Tencent, Baidu, or Alibaba, these are companies that big investors are investing in, the Cathie Woods, etc. of the world. As a result, I believe that this is a good investment. It's a good long-term investment. You'll be able to make at least 33% in gains due to the company's recent stock history of going up to $30 a share and currently trading at $20 a share. This is a company I'm going to keep on my watch list and going to start building a position in. Do your own due diligence. Let me know your thoughts. As always, make money, enjoy life. Peace.